I guess we got sound now. Probably have to add the mic to every different scene. Good morning, by the way. Let's go! All right. Happy CPI day. All right, seems like when Windows reboots, I have to add microphones to every single scene. But I believe you can see me. Let me remind you, or see me, hear me. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money cannot afford to lose. All right, now that should work. I'm going to have to do that one more time. So, welcome to Forex.Today. Yeah, it's so strange. Every once in a while, my machine just reboots. I guess Microsoft forces that. And then that kills the microphone setup. So, why? I don't know why, but I'd like to thank Microsoft. Anywho, my name is Wayne. I've been trading a long time. There's always something interesting going on. Let me share some of the experience that I have doing this over the years. Technical and fundamental analysis is fair game. Psychology, that's fair. Been through a lot of good times and bad times, so I can share those experiences with the overriding goal of maybe it helps you. Maybe you can leverage that to succeed sooner than later. So let me know how I can help. So we'll take a look at the charts today. We'll talk about CPI if you want. Hey, we still got inflation in America. It's just growing less fast than before. Okay. So anywho, we can talk about that. But really what we need to focus on are things like the terminal rate, and where we're going to be next year, where we're going to be by the end of the year, all these kinds of things. So, and then bear in mind, we're still in a quiet part of the year, so there's going to be a higher volatility than usual on bigger important news. And then as you saw earlier in the week, we can go through periods of like nothing happening. And then by the time, when September rolls around, we'll have the return of volume and volatility. So there's a lot of interesting things going on now. Just make sure you don't freak out. Okay? Ask questions, get involved. Take a look at the description below today's video. There's a link to tradersway.com. There is a link to fxbootcamp.com. There's a link to the oil trading course. There's a link to my book. These are all different resources that are helpful. There's 6,000 videos on YouTube associated with my work on the Traders Way YouTube channel, on the Forex.Today YouTube channel, on the FX Bootcamp YouTube channel, on the FX Street YouTube channel. There's a lot of resources, but become a member of this community, subscribe here, and attend the live streams every day. If you visit tradersway.com and you open up a demo account, you'll get into the back office and you'll see everything is clean and organized. And you're like, this is great. You can download MT4 or MT5. Cool. Very nice. You'll see the execution speed is fast, spreads are narrow, swaps are huge. Very nice. but they also have a business model built on ethics. It's a symbiotic relationship. They actually execute your trades into the interbanking system. So for them to do really, really, really well and drive yellow Lamborghinis around town, they actually need you to succeed so that you, over periods of time, slowly increase your lot size in your real account, your live account, and they keep executing your trades. So really, for them to make good money, you need to succeed. I like that. TradersWay.com. All right, there we go. I had to do it again. All right. No, all I was showing you there is that if you're in the oil trading course, today we're going to do midstream. That's where we is. Okay, we're covering the midstream. So what we've already covered was the upstream. Of course, the history and geology and all that. Then we did upstream. So now people know how to drill for oil in every little piece of the equipment and process step by step by step. Then they understand the actual oil patch of, the difference between a heater treater and a vertical separator, that kind of stuff. So they know this goes to this and how to separate sand and water and gas from the oil. They understand that process. And so now we're moving over to the midstream of when a truck arrives on the oil patch at a well site to remove the oil and the gas. Where does it go and what do they do with it? So that's what we'll be covering today. It's 4 p.m., Darko. Okay. So now you're going to know the difference, let's say, between fracking and cracking. Okay. Fracking and cracking, baby. So anywho, the news came out today, something called Consumer Price Index. Okay. My pleasure, Darko. Okay, let's take a look. Okay. By the way, have you noticed the trend in productivity? Productivity is down, isn't it? I was thinking about this, and I suppose it makes sense. Think about it. The people getting jobs now are the last people available. So imagine you're on the basketball court of a 7th grade school, and people are picking players for teams. The best players get picked first. And the last players are the least desirable. And they probably sit on the bench. They probably never get the ball passed to them. And when they do have it, they probably mess up, right? So it's interesting to see as we get to higher and higher and higher levels of employment, the people that we're adding to that are getting jobs have diminishing returns. They're not adding much productivity. They're the weakest of the herd. And the interesting thing is, I think you could look at this as a potential sign of when layoffs are going to come. So if the economy is slowing down and we have high wages because employers are scrambling and competing with each other to get employees, they just need more help. And so they'll hire you even if you're mediocre at best. And then once the economy starts to slow down, they're like, all right, we need to cut the fat on the pork chop. And all these people that we just hired, they're very mediocre. They're not adding much value. And we have to pay them pretty high prices because of inflation. So let's fire them. Let's fire them. We just hired them, right? You just spent $20,000 hiring them in advertising costs and all that kind of stuff. Yeah, lay them all off. Okay, so it's interesting if labor productivity is falling, that's a big oh. Okay, that the employees that we've added to the workforce are not very good. So pay attention to that. Okay, CPI. $8.7 came down 8.5. Okay. Core was 5.9, now it's 5.9. So that's the inflation outside of oil and ag, right? Energy and agriculture. Okay, so it's interesting. There's no change there. Another way of looking at this is the reason we went from 9.1 to 8.5 is essentially gasoline prices came down. Why? Because WTI prices came down. Cool. Well, I'm going to cover this today in the oil course. Well, cover it. There's a bullet point on it. But who buys oil? Who buys crude? Who buys WTI? Refineries. And they don't buy this time of year. Okay. They've already made the gasoline for the summer. So anyways, I think things can go back up, and I don't know if the market is prepared for that. So that'll be interesting if it does. So today is Wednesday, and you need to pay attention. At 10:30 p.m., oil is going to move. I got to move. Give me the juice. Okay. So watch oil move at 10:30 today. Okay. I sold half a Bitcoin today. I owned half a Bitcoin and then I sold half a Bitcoin. So let's see what you're up to. Thank you for participating in the poll. I appreciate you. Codename, which forecast are you concerned with? Let's see. Dollar versus euro. You guys are so consumed with euro. Yesterday, pound was by far the weakest currency, and almost everyone wanted to trade euro. It's like you don't do relative strength exercises. It feels to me you just trade euro because you always trade euro, and that's not good. Oh, you're looking at forecasts of inventory? That's interesting. Yeah, I don't look at forecasts of inventory. Cool. Once again, like, who forecasts? Okay, so anyways. What's the best way to trade the news? I would trade the fundamentals more than the news. But if you're going to trade the news, you would scalp or counter trend. So at FX Street, I wrote an article on how to trade the news. So let's see if I can find it. FXStreet.com. Continue. Trend, find our content. Probably find it that way. 94. I think I can click here. No. Maybe go back. Yeah, here it is. So if I go to FX Street, so right, here's my recent non-farm payrolls. Reed Wayne's model. Okay, so this model would probably work for any high volatility, okay, event. So you can see here that it's very detailed, and there's 2 different trading strategies that you can use. So I'll pop that in there. Okay. Okay. There you go, compliments of the firm. But that's just essentially scalping and counter trend trading. Okay? Simple enough. So that's how you trade the news. To trade fundamentals, you have to look at the aggregate trend in the subcomponents of an economy. So, right. So my new secret service focuses on 9 different subcomponents of an economy to create a trade recommendation based on fundamentals. It's actually 8 because the 9th one is actually looking at technicals. Right? They all go. Looks at the technicals as well as the other components of fundamentals. But those are long-term fundamental trends in each of the subcomponents. And then you still have to pair that with another economy or another asset. So you need to do that kind of analysis for the Great British Pound as well as for the US dollar, and then compare them. And is it buy, hold, or sell? But the thing is, now you have one pair, pound versus dollar, based on the fundamentals. But now you got to compare them to all different asset classes. So for those that just trade euro dollar every day, that might be good, bad, and ugly what you're trading, fundamentally speaking. But there might be far better trades somewhere else because you get better combinations of fundamentals. Okay, asset versus asset. Remember, in Forex, everything is relative. Okay. So anywho, there's the news for the day. PPI coming tomorrow, which is a look forward. Okay, a look forward at inflation because it's at the producer level, which won't get to the consumer level for several months or maybe never. Jobless claims. Remember, the Fed is really focused on employment. And then it's all about the pound. By Friday, you need to be on pound trades. So if you read that article that I just posted, so thank you, Original, for the question, and you'll see that I've done one of those trading strategies. Okay, so we can clean these templates up. Be a simple kind of trader. Can you do this for me, son? If you can, be a simple kind of trader. Yeah, it doesn't quite work. All right, and one more. Okay. Oh, hang on. There's a couple. Can you do this for me, son? Cool. Okay. Let's take these off the dilly daily, and we'll put them here. Actually, I'm going to put them on 15. 15, 15, 15, 15, 15. Cool. What's the best way to predict what the news will look like? All right, here's an easy one. You gather the same data that the government gathers. So you could take a look at prices in a basket of goods and services. What does gasoline cost? What does food cost? What does rent cost? Okay, that kind of thing. So one of the things I've been tracking is the price of a can of soup at the grocery store. I think I told you this, didn't I? Yeah, anyways, it's true. I've been tracking them for months. And by the way, I looked at multiple grocery stores. So I've been to a Walmart, for crying out loud, a couple of times in the last, actually probably 3 times in the last three or 4 months. I've been to Kroger's at least that many times. And Amazon.com. So those are the 3 I've been tracking. Cans of soup went from $2 to $3, and now we're about $2.25. So original, what am I doing? I'm trying to build a CPI basket. And I'm trying to find something ubiquitous. Now, you can also track things like the cost of a Big Mac, but that has to do more with currency valuation. What I'm not trying to do that. I'm trying to say price, which is very, very similar, but quite different. Because a Big Mac doesn't change price very often. But a Big Mac in Tokyo has a different price in Oslo, and it has a different price in Shanghai. And very often that has to do with currencies. So anyway, so going back to the basket, I do that. I look at it. Okay. You can do research on rents. The National Association of Realtor has really good data on the real estate industry. Okay. And you do that. Another way, original, is you do fundamental analysis of economic data. Okay. So that's what I was doing earlier today. And that might help you think about where a piece of news will be in the near future. So what I'm saying is you look at the trend and say, well, if the trend continues, okay, if the trend continues, what would be the next move? So let me get you some research here. Okay. So you can see the trend has been up, and you could project out that it would continue up. But then, of course, what you want to look at is then you do your own analysis of price. So now you got price and trend. Trend and inflation. This is inflation around the world. And then what you do is say, well, I've been doing some research. Wheat prices are down, oil prices are down, gasoline prices are down, wages are up, rents are stable but up. And so you're like, well, those are sticky. Rents and wages are sticky. And until unemployment rises, then wages are going to remain elevated. So those are sticky. So what are more variable? And that would be what goes into core. So you can see core didn't change, because the things outside of energy and food are very often stickier. So you could look through that and say, well, some things are moving, the variables are moving. So a headline will be down, but core will be flat. You could do all of that. Okay. So original, like I said, it's fairly easy. You just have to do the analysis. So you'll see in that article I posted on FX Street, I go through how to build a model for non-farm payrolls. So I wrote the whole thing down, and you'll get a sense of what I did to predict that non-farm payrolls was going to be significantly higher than what was anticipated by industry experts. What was the difference? I did better analysis. Kenneth says, would you do a course on how to gather and analyze data? Yeah, well, I essentially did in the macroeconomics course. One of the first lectures, we went to the FRED, the St. Louis Federal Reserve economic database and showed you how to draw your own data. CPI, GDP, real GDP, okay? That kind of stuff, per capita GDP. Okay, cool. Coolio, 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 coolio. Yeah, this threw me off earlier today. That's the same thing. All right, so let me go put that in there. All right, let's move on.com. Okay, when the dollar weakens, exotics benefit. And holy smokes. Isn't that pretty? Look at that beautiful peso. The target is 1972. It's actually 1973 probably. Actually, it'd probably be more like that. And then I'll bring this down a little bit. Cool. How many pips do I go for what? What kind of trade plan are you talking about, original? For a scalp, a spot, a swing, a trade, a position? What kind of trade? So let's do the commodities here. So earlier today, I was in Bitcoin. I owned a half a Bitcoin. Oh, that's typically 333. That'd be the standard operating procedure. But then I adjust based on market conditions and the structure and all that kind of stuff, right? But the standard operating procedure is 333. So, for example, what do I mean by that? So none of these are currencies, but like, for example, let me just randomly pick a currency. Okay. And let's say I wanted to throw down a trade right here, right now. Okay. So when I throw my auto stop, what you'll see is my stop loss is set at 33 pips. Okay. The take profit is 333 pips. Now I can adjust these things obviously once they're there, but if I threw down a trade, it does a 333 automatically, and then I can adjust. So that'll show you my thought process. Okay. CAD is quite weak. You'll see. Look at that. Quite weak. Still coming down with oil. So let me go back to commodities. Pizzo says, how many hours do I spend analyzing the market? 24 hours. Like, when do I stop? Like, why would I? Yeah, it's kind of, why would you stop analyzing the market? It's always. Okay, anyways, let's get back to this. Back to reality. Oh, there goes gravity. Huh? Come on, Mom Spaghetti. And then technically this is the open, right? So I'm going to mark that slightly differently. Okay. Of course I trade gold. Hey, Original, I've been doing live streams on YouTube since, longer than longer than Google has owned YouTube. There's 6,000 hours or more of videos on YouTube regarding my trading. Feel free to subscribe and maybe watch some of them. Right? Like, do I trade gold? Okay. Anyways, here's the prediction from 2 weeks ago on gold. And we're at the high side of the move. And I'm waiting for a breach of the 21 to the 55,200, and then lower high next week, and then maybe lower low. Okay. So this is what I did before the Fed meeting. The Fed came out less aggressive, and so far it's worked ticky-boo, but I think people are going to wake up and find out 8.5% inflation is still too much inflation. Hope said she traded Ethereum. Yeah. Yeah, I forgot to cover that. So I'll go back to Biddy. Yeah. So it's just sort of, that's it. Just sort of done. It's come and gone. Yeah, you could, if you break out of here, it could be very interesting. Yeah, for sure. You can see, I guess I need to adjust this slightly, right? That we do have a trend that's in play. Another way to do this is maybe add some price action pivot points. Insert indicator, custom, price action pivot points. Okay, on the short run. Okay, now remember the price action pivot points. They're not looking at. I'm trying to isolate what it's doing now versus what it's going to do, and you can see what it's really happening is we're actually moving sideways. So if you're going to try to get more of a trend versus price, you're going to have to look at more than a couple of days worth of price action, if you will. Okay. And that's probably what you're trying to ride here. Okay. So right now, range bound bullish. Original, I guess you're not following. I have it drawn out 2 weeks ago. I have 4 weeks worth of price action drawn out. There it is, right there. It's drawn, Original. Okay, so I just explained. I'm looking for it to roll over down to the 55, then up for a double top, and then a drop next week. Yeah, Jeffrey, I'm going to try to look at it today. I had to fire the programmer. So I have to figure out what he's done okay and what he's done terribly and see if I can fix it myself. Yeah. Why don't you feel bad for me, Majib? Majib, if he didn't suck so much, he would have a job. The problem he had is he had no common sense. None. He just had no common sense. He would just do things like it's not a misunderstanding. It was just emptiness. He would just do things like, what are you doing? Like, it doesn't make any sense. I don't understand how he would get to conclusions. And of course, he never asked questions. So then he would do what he thinks is right. And I'm like, I don't know what you're thinking, man. I give him very basic, simple instructions. And it was just, I don't know, no common sense. Just none. Yeah. No. Hope says engineers don't have common sense and blah, 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 blah. No. This guy had half a brain. You would calling him an engineer, I think, is a bit of a stretch. Yeah. All right, but whatever. Yeah, so whatever. Yeah, I'm ready for my second breakfast already. So look, we got to work this out. So one of the things we talked about several days ago, a couple of things we talked about, and you can go back in the other videos. CPI was likely to come down because energy prices are down and food prices are down. Quite factual. And the market is going to move on that. Then we will realize we still have a problem. We still have 8.5% inflation. And then we're going to go back to, well, I guess the Fed is still going to have to raise interest rates pretty high. And so now we have to go back and debate the terminal rate, which is the whole point anyway. So every single FX boot camper knows that we're watching the terminal rate, not the headline rate. We're looking at next year, for crying out loud. So for those that are just trading headline CPI, you're not even asking the right questions. So every single FX boot camper knows we're doing the terminal rate. Right, the day trading group, the swing trading group, they both have been asked to check the terminal rate every day. So now it's going to shift again, and then it's going to shift back. And really what we're doing is we're treading water until institutional investors come back from vacation, both in the United States and in Europe. Okay? Yeah. Cool. So that's that. And we just wait. One of the things I talked about the last 2 days in the day trading group was looking at all kinds of assets around the world, whether they're major currency pairs or cross currency pairs or stock indices or commodities or even treasuries, almost like the whole market has been flat. And so you shouldn't be over trading when the market is essentially not moving. Now things are waking up because the dollar is weak in response to headline CPI. And right now the best trade is Kiwi dollar, followed by Aussie dollar. Up. Okay? The best selling trade is South African Rand. USD Rand has dropped the most. Okay? Now, an interesting thing is the yield on the 10-year T-note has also dropped significantly, which means investors are buying the 10-year T-note. But are you guys watching the 2-year note? It's like 3.5. It's crazy. Three and a third or something. So the 210 spread is telling you people on the short run believe the Fed's going to jack up interest rates super high. But on the long run, it's all going to come back down. And one of the things I've been discussing in both the day trading group and the swing trading group is that might actually not be the right model. That the 2-year and the 10-year should probably be priced about the same. So right now the spread is like 50 basis points on the 210 spread. But the spread should probably be 0, which is also weird. Right? So let's take a look if I got something here. Yeah, okay, so it came down on the news. Okay, so it was higher earlier today. It was 3.3 and a quarter. Okay, and now it dropped. Okay, which means people started buying, so they think interest rates are not going to go up as high because they believe CPI. Oh my God, it was so much better. Whatever, dude. But nonetheless, okay. So when you're looking at the 2-year was 3 and a quarter. Okay. Now 3.12, and the 10-year is 2.75. So it went from 50 basis points shift to something different. But what they're telling you is the short run interest rates are higher than the longer run interest rates. And that's weird. That's a form of backwardation. Okay, the curve is inverted. Okay. Okay. So interesting things to think about. What that's telling me is there are people likely wrong in the market, and that the people may be overreacting to CPI. But again, we talked about all of this days ago. And then at some point, what will matter most is the analysis of where the interest rate is going to be in a year. That's the terminal rate. And you need to be watching that much more than headline CPI. And remember, when you strip out core, think about this. When you strip out everything and look at core, inflation didn't change. So people are shorting dollar today because they believe inflation is improved. But that might not actually be true. Nothing changed. Maybe. Now, I like throwing in food and energy because, well, we all have to do, right? We all have to eat and consume energy. Gordon says he had a carpenter like my programmer. Yeah, does a good job doing stuff that you didn't actually kind of ask for. I have a carpenter that's done a lot of work and doesn't finish anything. Everything is 95% done. Then you come back and you're like, well, what about this? And what about this? And what about this? And what about this? And what about that? Oh. All right, I'm going to go eat breakfast. Again, it's late in the day for me. It's almost 10 o'clock. I'm starving, man. Okay. So we'll see what's going on. Dollar very weak and yen now getting strong. Look at that euro come down hard. Interesting. CAD getting crushed. It's a gobbledygoo, wackety world that we call Forex. Some things are up and then they're down and then they're up and then they're down. Okay. So again, if you're wondering what I'm doing here, you should try to figure out why these prices, and I'll give you a hint, the tools I used are no longer there. And then the strategy is outlined in that article that I posted earlier on FX Street. I gave 2 different ways to trade a high volatility event-driven strategy. They're just pissy little trades, right? They're not deep dive contemplations. But if you read their article, it'll show you which one of the strategies they are. Okay. Pizzo wants to know where you get the indices. I'm uploading these indicators even today to fxbootcamp.com. So anybody with a basic membership or higher will get all these indicators as a bonus for being a member of our community. And that basic membership costs $88 a year. A year. Peace on earth. May the pips be with you. May your profits be above average. Thank you for being part of the Forex.Today YouTube community. If you're in my oil trading course, again, we're going to do midstream and an overview of actually how to take WTI and turn it into jet fuel. You'll learn the basics of refining, but we're actually going to do a very close look into the process of distilling, not vodka, but WTI, and how we essentially combine a heater treater with a vertical separator. But that's just distilling. We'll also talk about cracking. We'll talk about blending. We'll talk about treating and so much more. I'm tickled pink. I can't wait. I'll see you guys later at 4 p.m. If you want to join the course, it's half price. The link is in the description below. Have a wonderful day, everybody.